Palantir stock so far this year has done very, very well, but is it currently too expensive? I want to read through a Motley Fool article that came out just a few days ago in today's Palantir segment, and I want to talk about, what I think about this. I've not read it yet, so this is going to be reacting to this in real time. So let's have a look what this says. So the title of this article is Palantir stock is up 40% so far this year. Where will this AI winner land at the end of 2024? Artificial intelligence has dominated the market to start 2024. Nvidia recently became the most valuable company in the world. I wonder if it still is actually. It keeps flip-flopping between first, second and third and is up more than 150% year to date. Investors are betting that AI is going to be a huge market opportunity as the large tech players spend tens of billions on it. Yes, we already know that more and more enterprises, more and more government organizations are spending more money on artificial intelligence. They are increasing their budget on artificial intelligence. This will increase. Everyone wants a bit of artificial intelligence at the moment, but there are going to be certain companies that benefit more than others from this. And there's going to be a switch in the market. At the moment, money is being thrown at any company that has an AI solution of any sort that mentions AI in any of their earnings. This is coming to an end. Money will now move from all these companies into those companies that can actually give tangible evidence, that can actually give tangible use cases, companies like Palantir. And Bank of America have recently said as well that they are reiterating their buy rating and their $28 price target. And one of the reasons for that is because Palantir will benefit from this continued AI momentum that we're seeing. Palantir Technologies is one of these AI companies. Shares are up 40% year to date with accelerating revenue growth as customers adopt its intelligent software and analytics tools. Where will this AI winner land by the end of 2024? Let's find out. At its core, Palantir builds custom advanced analytics software. Customers range from the US military and its allies. US government revenue was more than $250 million last quarter alone, to the private sector. And when they say the private sector, I think they're underselling it a little bit there because it's not just one area of the private sector. We are quickly seeing how agnostic Palantir's solutions are. We hear about them in healthcare, in finance, in the sport industry, in supply chains, literally in space. So everywhere that you can think of is able to work with Palantir. Corporations, especially larger ones, utilize Palantir's tools to analyze operations and track how its business is performing. Recently, Palantir has pushed its AIP, so its artificial intelligence platform, for its customer base. Yeah, and what we're actually seeing now is existing partnerships that were previously founded on maybe using Foundry are expanding their partnerships to add in the artificial intelligence side, so to add in AIP into their contracts. I'm not going to pretend to be an expert on how these tools actually work, but automated intelligence that provides useful insights can be important for complex organizations. Yes, the way of actually, well, you've got two things happening here. You've got understanding your data. So like bringing in all the data from all the inputs and all the outputs, which is very, very vast, especially at big organizations, giving that into one centralized place, and then actually being able to understand that data and action things based on that data in real time. That's really powerful. And then on top of that, they're actually utilizing the ontology plus LLMs plus artificial intelligence to give even more power to these organizations. And it looks like these tools work. Over the last 12 months, Palantir generated $2.33 billion in revenue. It has 554 total customers, 427 of which are commercial organizations, so not the government side. This is up from just 49 commercial customers at the end of 2020. Look at the growth in their customer count there. And yes, when this writer says it looks like these tools work, you've only got to look at the AIP Con days to see that. They literally, customers are coming free of charge to tell you how powerful Palantir's solutions are. Over the last few quarters, Palantir's revenue growth has started to accelerate again. I've spoken about this before and whether or not we should be concerned about the revenue growth that we're seeing. In terms of this being quite an early company, in terms of it being a growth company, is their revenue growth actually too slow? I don't think so. I think it's a lagging indicator and we're going to see a lot of growth to come. But let's carry on. This is likely why the stock is up so much this year. Investors love an accelerating top line. Yes, they do. Last quarter, revenue grew 21% year over year to $634 million, driven by 27% growth in the commercial segment. Back in 2023, revenue growth had sunk to around 12% year over year. If we were still seeing that now, 12%, and it carried on like that over a few quarters, I would start to get a little bit concerned, but I don't think that's going to be the case at all. Profitability is shining right now, which is a great sign for the stock. Net income over the last 12 months was $300 million, which is a huge improvement from $500 million to $1 billion annual losses a few years ago. Yeah, they've come a long, long way. And since they've hit GAAP profitability, it's remained. So that's really, really good thing to see. Palantir is proving that it could grow efficiently, meaning while generating a profit, a sign of a healthy software business. So now is the question, where will it sit at the end of 24? Because it's an exciting company, revenue should continue to grow as more and more organizations embrace AI and software analytics. The stock still looks expensive though, and I wouldn't buy it in the summer of 24. Let me show you why. Let's see if we agree about this. So today it has the market cap of around $54 billion. So it's actually still quite a small company, really, if you're comparing this to some of the other companies that I've spoken about as often as Palantir. Still quite small, but it's getting a lot of attraction. That gives the stock a trailing price to sales ratio, so a PS ratio of 24. Remember, this is a sales ratio not based on profits. With an operating margin of 8%, Palantir does not generate much in earnings for every dollar in sales. Margins are likely to expand over time, but that is not certain. Obviously, nothing is certain. Software margins, SaaS margins are always better. I think it will expand over time, but yeah, I know it's not certain. But even with expanding margins, the stock still looks expensive. Assuming Palantir can grow its revenue by 30% a year for 5 years, so that's an acceleration from current levels. What are we on now? I think it just said like 21%, was it? Yeah, 21%. So it is a slight acceleration to 30%. It will generate $8.65 billion in earnings 5 years from now. At 30% profit margin, that equates to $2.6 billion in earnings, or a 5-year forward price to earnings ratio of a P ratio of 21. That was a mouthful. This is not much lower than the S&P 500's index long-term PE level. What this should tell investors is that Palantir stock is already pricing in 5 years of 30% revenue growth and a profit margin expansion to 30%. These are some high expectations that should keep investors from buying Palantir at the midpoint of 2024. So that article is basically saying Palantir is great, it's doing really well, but don't buy it at the moment because it's too expensive. Let me know your take on that. Personally, my take on this is the company is growing, it's doing everything that it should be. It's again providing some of the most real-world AI, real-world use cases that we see. Businesses, organizations are going to be lapping up Palantir solutions, as we're already seeing. That's only going to expand, only going to continue. The right people are driving this business. They have a lot of talent at this company. Everything looks to be going the way it should. It's going to become intrinsically more valuable. That is what I'm seeing. I am not going to stop buying at the current prices in case it's a little bit too expensive in the midpoint of 2024 or not. Granted, I'm not buying as much as I was maybe when it dipped slightly, or as much as I'm buying Tesla right now. But that just changes on a monthly basis. I'm just looking at what's going on out there, but I am still dollar cost averaging in. Let me know what you think about that in the comments below. If you want to watch these episodes ad-free, get exclusive and extended content and a bunch of other perks, become an insider of the Inner Circle Vault. Link in the description.